Okay, what's happening, everyone? Let's get the model up here, Auto Shop V2. We're gonna finish this today. I'm a little late, it's 10:30, but we're gonna try and finish this up today. It's Wednesday. So first let's do a quick sound check. Let's get this in here. Oh, whoops, here. Test, test. Okay, so whoops, here. Live now. Okay, so this model, Auto Repair Shop, is part of the industry-specific financial model bundle for $4.99. Also, you can buy it separately for $125. It's right here. So far, we've done a whole bunch of updates. This was an older template, so it didn't have a lot of the like discounted cash flow analysis and some other overall summaries. It obviously didn't have three-statement model because that's what I'm adding here. We're also adding the inventory calc for tires and um, parts and accessories. So a lot of updates. Don't forget to check out more. You can buy all the things I've ever built for $9.99 on the site, and you can also buy all kinds of different things for HR, accounting. A lot of startup models. I've got probably 60 or 70 specific startup models, and that's what we're updating um, this year. Hopefully by the end of the year, I should be done. I think I got about I don't know, maybe 15 more to do. So let's go into it here. Yesterday we got all these tabs imported, try to unbreak everything. Today we're going to try to get the references right and just get everything fixed. So we'll start on the income statement. We've got sales. Let's see, do we want to do a couple sales types? Let's go over to the monthly detail. So we got tire sale revenue, repair revenue. We'll do repair revenue and then tires and accessories, parts and accessories. So we'll have two here. Oop. Repairs, tires, parts, accessories. So let's get our revenue in here for that. Where's tire revenue? And then parts and accessories. Tire. Oh, wait, that's tire. We want repairs on this top one. Repair revenue. And then tires. It's this one. And then parts and accessories. This one. And we will have checks to make sure all of this, all the data on the monthly details tying into all the financial statements because it has to. It's the same data, so we're just representing it differently. All right, so there's that. Cost of goods sold. So this is going to be a really important one because we got to tie some inventory logic to it. So cost of goods sold is going to be tire costs plus, and this is an item where your cost of goods sold is not a cash item because we're going to put in logic to say, we're going to purchase tire and parts and accessories inventory, every X amount of months, and so that will actually tie to the cash flow. So tire costs, but for the purpose of income statement, you want to know the cost of goods sold of the things sold in that month. So that's what we have here. So tire costs, uh, parts and accessory costs. Now that is that. And then you see we have some nice logic here in the inventory tab. Yeah, these are a bit bigger numbers. Let's make this wider. So we're buying every 3 months. So you buy for month 1, 2, and 3 in month 1, buy for month 4, 5, 6 in month 4, and you can adjust this. Like, let's say you wanted to buy inventory every 6 months. That's probably too far though. You probably do every 2 or 3 months. We'll just do 2 months here. And so on the balance sheet, it's going to show this inventory level, the total purchased minus what was used, and then it'll go down, and then as you purchase more, it'll go up and down over time based on expected sales for those periods. So this is some nice logic. I built this a couple years ago, and it's worked for inventory for these really good. All right, let's go back to the income statement. So that's linked into there. Operating costs, we just got fixed costs. So it'll be this. Startup costs looks like it's already linked up. C19, yep. Drag that over. Okay, so this good interest is just pulling from the debt schedule. Depreciation's pulling from CapEx. All right, good. Let's go to the balance sheet real quick. I want to see inventory. Okay, that's what I expected this to see. Now, if we did it, watch if we do every 6 months, you can kind of see it a little bit more clear what's happening. So here you can see the inventory getting depleted over time, and you buy more, depleted over time. So this is important for cash flow planning. We'll put it back to, let's say, maybe every 4 months. Okay, so income statement is good, annual. Oh, we need to update this. Make sure these match. Good, so net income here matches net income on the income statement. Cash flow. So we have revenues. Here's the actual payment for the inventory happening based on that schedule. We have other OpEx that looks C25. Yep, that's fine. Interest and taxes. Okay, so we got operating activities looks good. CapEx looks good. Sale of business. So here we need to look at the terminal value. So terminal value, the way I do it is for this, it'd be an EBITDA multiple is probably the most common. So we take the trailing 12-month EBITDA of whatever the end month is, times the multiples defined on the global control. Here's a value. We get to find what's applied to CapEx versus extraordinary income. And that's our total end value. So if we go here, now if we don't show a terminal value, you can see all these things zero out. Okay, so this looks fine. Let's make sure this is, so row 28. Yep, that's EBITDA. Earnings before interest, tax, depreciation, amortization. And it's 9428. Okay, so that looks good. Let's keep going here. CapEx, we'll have to deal with, or cap table, we'll get that after we finish the cash flow statement. So sale, business, sales, depreciable assets, looks fine. Debt, principal. Okay, now sale company stock. So this is where we're going to define with the model the minimum equity required based on startup costs and burn and all that stuff. So what we have to do is go back to the monthly detail and start cleaning this thing up. So let's delete 38 to 393. 38, 393. Debt payments, that's fine. Let's delete up to 360, 347, 360. Okay, so debt payments, what is this? Nothing. Oh, we don't need this. Okay, so cash flow. So now we got to add back some new items that we just put in. We have CapEx, we have taxes, we have proceeds, uh, exit proceeds, and then uh, inventory purchases, and then add back cost of goods sold. And then we'll get to cash flow. So I'm going to copy these here, 348. 54 to 58. All right, so cash flow. Let's format this. Startup costs. That's another one. Honestly, we don't need any of this. Let's just clear all of this. Okay. Other cash flow items, and then cash flow. And then cumulative cash flow is how we're going to define minimum equity required. Okay. CapEx. Cash flow statement here. Taxes here. Exit proceeds, these two. Inventory purchases here. Add back cost of goods sold, which is going to be here. No, yeah, there, and tire costs. There. And then startup costs is going to be just here. We have debt proceeds. We need if this equals that, take the debt proceeds, otherwise 0. All right, I think that's everything. So cash flow is going to be EBITDA minus debt service, and then this is going to become through as negative, so we can add that, add all of this. Yep. What was that last one? C53 plus C354. Let's format all of this. It's fine. Okay. Now we could drag all this over, and that should be a good check against everything, this final cash flow number. We do have some errors probably in the visualizations if I had to guess. We'll fix that after this. Okay, we can simply copy this into the annual in 347. And then, however, this one we have to make equal to here. That's fine, and then this is all sum. Okay, so let's check if we matched everything. This minus the ending cash balance here. Perfect, so that's the duplicate, or it's the same, meaning the annual and monthly details are duplicate matches. This balance really isn't necessary. It'll be in the balance sheet if you need to see it. Okay, now the moment of truth to see if we all matched up. We're going to reference the minimum cash balance here for the equity required in 356. Total equity required 356. So 3 million. So that's going to go over to the cap table and you can define how that's achieved or fundraised for. You've got CapEx. And one note on the CapEx, just I'm going to start saying this. Never delete the dates. You can always have a date in here. If you don't need to use the slot, you can just zero out the cost basis. In these things is fine, but don't ever leave the date column blank. Otherwise, you're going to get an error in these other ones. And that applies to all the new startup models I've done this integration on. Okay, moment of truth. 0. Okay, so we're solving for 0. We are there in the end, or in the first month. That must mean there's no burn happening. Let's check. So operationally, yeah, we're positive right from the start. Now, if there was some burn, let's say, oh, let's lower some of these sales for year 1 per month. Let's see if that does it. Yes, I will fix the visuals. There you go. So now you got some burn happening here. And that burn, now you'll see how the min cash really applies in the balance sheet if we go over there. Now you can see perfect. So we're solving for 0 because the whole model solves for making sure we have just enough money to not have a negative cash balance, which is the case here. Okay, that's good. That's a good just high level check that I like to do. Balance sheet annual looks good. Ending inventory balance is just 0 because it must be an even number. Yeah, for, let's say we did this as, let's say, what number doesn't go into 12? I guess you'd have to do 7. And then you'll see, yeah, now there's a odd balance on some of the years, but really you don't need to think about that when you're building this out. Okay, so this looks good. cash flow. Now, okay, executive summary. We'll do, now on this, a little bit more discretion, so we can do um, repairs, tires, parts, and accessories. Do all three on that. Okay, so let's get those revenue pieces. Repair revenue, tires, parts. Now, this should match the income statement. Let's just make sure. 2236. Nope. We are quite a bit off here. What did I do? Oh, I referenced the monthly. This needs to be annual. And you can see all the reasons why it's good to check yourself, because especially in a model like this where there's a lot of stuff going on, because you can have errors real easy. And one of the biggest things why you can get paid a lot doing this is your accuracy and sanity checks and just general checks to make sure logically what you're saying is accurate, and check, and that will help you figure out issues, is very important if you're going to be successful in this. All right, cost of goods sold. Here we'll add up both tire costs and parts and accessories. And we can check, make sure this matches income 50, 577, 50, 577, okay. Selling general and administrative is just going to be this here. Okay, EBITDA 22,107. Nope, we're off a bit. Oh, startup costs we're missing. That's fine. That'll be down here. Okay, so now this should be lined up. Debt service we gotta update with most of the items that are already here. Startup costs, exit. Anything that references one of the financial statements I know is correct. Loan proceeds, that's not. And then inventory, that looks right. And taxes. And then this is not relevant. Okay, so based on all of this, oh, this needs to be a negative because we're just summing up. Okay, so let's minus from annual detail and see if we're lined up. Nice. Okay, so this means this executive summary is representing everything on the monthly and annual detail accurately with this zero match. Let's go to distribution. So here's our discounted cash flow analysis. All I want to do is sum up the final cash flow per period in 355. Took me a bit because solving for cash flow and distributable cash flow was it was not easy to find a nice solution that worked for any set of cash flows that could ever happen. in any kind of order or plus or minus in any given period and not double counting things. So we've got a nice set of algorithm here. What's my monthly year number? It's in row 2. Or no, yeah, row 2. So you can see I've got a lot of logic to make sure in these two lines, there's a lot of stuff going on to make sure these numbers are right. All right, remaining equity to use. So this is going to be my monthly detail. Total is period 0 cash flow. So debt proceeds and startup costs usually what that's going to entail. And then you want to do, well, you want to do the equity minus, rather, plus the net of those is always going to be that number. And then this, oh, that's that total. So here's the cash contribution requirements and cash flow. We have the project IRR and net present value based on some discounted rate you want to apply. I like this visual. I'm going to keep this going forward for these, so it's pretty cool for investor and owner cash flow, or essentially insiders versus outsiders. Let's make sure, yep, this looks like it's all referenced right. Now our check. So this is checking just to make sure the flows here are good. Now this is going to check. So the total of these all cash flows should always be equal to this annual ending cash balance. Perfect, it is. All right, business overview. So this is kind of already done on the executive summary. So we just basically did a better version of that. We could put a visual in to this though, just to show high level, like say high level revenue by type. So revenue by type, get a legend in here. Format this a little bit nicer. Let's do a stack column. It's always better when you're doing aggregates. And then what looks good? That one's not bad. Do a thick outline, light gray. So we can have revenue by type here. And then let's put maybe we'll do EBITDA. Annual EBITDA. Annual revenue. Okay. Format some of this. Oh, still got some chart. We'll have to go to the visuals to update that. These look all perfect. Equity multiple, IRR for project investor and owner. That's good. This is good. All right, visuals. Yeah. Okay. 5-year expenses. Well, it looks like actually, let's just do 5-year. I think I was trying to put debt in here before, which I'd rather not anyway, so let's just do those three. Fixed costs, parts and accessories, tire. Do we want to show, do we have labor? No, that's just in the fixed costs. That, parts and accessories. No, okay, so repair. So we got tire sales, tire costs, gross profit per tire. Actually, let me minimize this so I could see. Tire, tire revenue, tire cost, and then parts and accessories cost. So we have those two, and then the total fixed costs here. Okay, that's fine. Uh, this is just no longer relevant. Revenue, oh, this is fine. This is a cool chart. By repair, parts and accessories, or tire sales. You can see 3D chart with those. Okay, zoom in a little bit. Okay, that looks good. Cost breakdown. Oh, this looks like it's using the same data, but it's showing it by year for parts and accessories, fixed and tire. Okay, that's fine. Gross profit. What happened with this? There's just no. Delete that and that. Uh, Revenue, expenses, and EBITDA. We already have that on the executive summary. Cash flow, I will put in here for sure. Tire sales breakdown by tire type per year. Yep, we'll definitely keep that. Okay, so cash flow. We'll do it monthly, and it's right here. And you can see the big down months would just be when we buy inventory. Okay, and then I'm gonna put cumulative as well. Hold on, what just happened? Oh, there we go. So here's that. Okay, so now you can see the cumulative effect of all of this happening over time. And actually, this kind of would look cool as a line chart, I think. Or maybe, ooh, that looks good. Yeah, like that. Let's do that for both of these. Yeah, I like that. So there's the accumulated effect of all the operations and exit. This is basically when you break even on your initial equity investment. Let's slant these a bit. Okay. Now, do we want grid lines? That's a question. Or is that even an option with this? Yeah, we'll leave it. This is fine. Oh, spelled this wrong. Cumulative. Making sure I spelled it right over here. Okay. Okay, we're making progress. This kind of cash flow. I mean, this is basically just showing you the future cash flows and discounting it at a discount rate. Where, what happened here? Oh, I see. The revenues and EBIT are just for the valuation, so this is just going to be cash flow per period. There's a discounted value of it. Here's a terminal value, discounted terminal value, and then summing up these two would be the present value of the future cash flows. Okay, yeah, that's fine. We'll keep that. Visuals are now good, good, and good. Cap table looks good. IRR matches, yep. 478, 29.8. Yep. Okay, we are getting there. Sanity checks. So that's good, good, good. Annual detail, gotta update that. Equals that. This is obviously got to be updated. And then that difference should be the equity requirement. Perfect. Executive summary. I-34, that's good. Distributions 1B34. Perfect. All right. So this is great. We're about done here. I'm pumped. All I have to really do is update the index tab now with the new tabs, and this is all set, fully upgraded, integrated, and we'll see what in the world happens later this week. I don't know if I might add. I've been doing the weekend was pretty crazy. The weekend I did a lot of template work, video work. I added a new bundle. I did a bundle for like mom and pop, general mom and pop shops, like all the different templates that'd be good for them. So I don't know if I'll do anything new this weekend or after, but probably next week. I might get into something brand new. I really, I, I can't tell you guys how excited I am to be done with doing these integrations. I'm really happy they're getting done, and I'm still got, I still have a solid, probably the rest of the year to finish these, or at least 3 or 4 months till I get down to the end and I can kind of slow down. But I am happy they're done because now, all the 50 or 60 startup models I have now, before they never had income statement, balance sheet, cash flow statement formal. They just had the monthly and annual detail and some summaries, but they didn't have these formal statements, and now they all do, which is huge. And I'm not increasing the price on anything, so I'm doing it. It's a lot of effort. It takes a lot of time that I could be doing other stuff and adding new stuff, but I think all of them deserve it. So I'm just gonna do it, and we'll get through it eventually. Um, it's a long-term thing. So yeah, we'll see. Don't forget, check out smarthelping.com if you want to check out more models. I've done a lot of SaaS templates, and these are almost all upgraded, I think, except for the ad network one with the new uh, monthly and annual income statements and cap table and just all the layout. They're all updated with that. I've got joint venture waterfalls where you can just like plug in a top line number per period and see all the logic for different distribution structures, preferred equity, preferred return, different waterfalls, cumulative distribution. Uh, I did a cool multi-member fund. This one was actually pretty insane. All the stuff going on in that one. Uh, the self-storage one was a really cool one too. This one, I made it so you can actually plan out 6 separate deals, all with their own waterfalls in different terms, and it all flows on the same timeline, but you can control the assumptions of each deal separately. I think I said over 15 years, and basically it's an equity ramp to see, how you can deploy capital, a certain amount of capital, and see how it can grow as you go through the deals. And I saw this from a Twitter post I got the idea from, and so I built it out. And this was a really great one. Real estate bundle, we got all kinds of stuff. So short-term rental is a new one. I recently upgraded the mobile home park with park-owned homes logic, unit-based acquisition model. This is just a general real estate model for buying a building with, I think, 10 or less units. Value add flipping calculator, very cool logic here. Self storage, like I just went over. I've got a mixed use real estate model, multifamily, and then some general waterfalls that come with that as well. So tons of value here. I've also got tools for people that want to just track their inventory. Daily inventory tracker, FIFO cost of goods sold valuation. This was probably one of the top pieces of logic I've ever built. Accounting tools, industry specific bundles or models. These are all startup models that I've been working on upgrading. Human resource templates like timesheets, termination savings, financial impact analysis, employee training tracker, benefits tracker, tool for hiring and firing, employee scheduling, lots of stuff here. And then money lending, I've got a couple models specific to that industry. Okay, well, have a